Hi everyone! Before presenting our credit convictions for January, let me wish you all a very happy new year. The opening month of 2022 will be driven by the amount of disruption to the growth expectations that Omicron can bring. The question on every credit investor's mind is whether economic growth is dampened to an extent that can hold off the inflationary pressures threatening rates increase expectations. We therefore expect to evolve in a continued context of volatility in credit markets in January. Our convictions are focused on the high beta asset class, which provides protection against rates move versus the high grade one. Within high yield, we favor European and Chinese high yield over the US one. We believe the European high yield market benefits from tailwind technicals, offering attractive absolute and relative valuations on the cyclical side of the double B to single B market. This should immunize it from the volatility coming from the ECB positioning and the upcoming Italian and French elections. Our positive view on the Chinese high-yield property market comes from valuations which now fully embed potential defaults from the weaker and most leveraged players. The sector will also benefit from the upcoming easing of financing measures from the Chinese government, as this sector still represents 40% of GDP. We see a less compelling trade in US high yield, given the current level of valuations of the weaker end of the quality spectrum, especially in the context of both the Fed monetary tightening and the M&A and LBO activity outlook deemed to increase leverage levels. On the subordinated debt front, in a context of rates volatility, the continued strengthening of fundamentals should unfortunately not be the primary driver of the asset class performance in January. We see, however, pockets of opportunities in areas more shielded from the rate sensitivity, which bring attractive valuation levels after the market moves of Q4 2021, such as 81 CoCos in euros and Tier 2 papers rated high yield from Peripheral Banks. Finally, we expect a strong pipeline of ESG debt issuance, whether green or sustainability linked, following the pass of 2021, boosted by the taxonomy implementations in Europe, as well as the ECB review on greening its corporate sector purchase program. Thank you very much for your attention, and do not hesitate to contact us for any further details.